Hey there, everybody. Yes, it is loud, and there is a lot of activity going on in the background right now, and there are no French fries here, at least that I know of yet today, because people are too busy trading. Welcome, everybody. Happy Thursday to everybody. Can you all see and hear me okay? Hello, Herbert. Appreciate the email you sent, Herbert, very much. That's why we're here. We're here to help people out. Can everybody hear me and see me okay? Mike Clark, how we doing? I am waiting for some confirmation here. Okay, there we go. Thank you, thank you, thank you. Okay, it is a busy day down here. Boy, I wish we were down here yesterday when the you know what hit the fan after Powell. Okay, but it's kind of continued on to today. I'm looking up on the board here, and you know we saw a strong market coming out of the gate. Kind of sold off a bit back to S&Ps were down only we're up only 9 points at one point. Rallied back when I was on Schwab Network earlier today. We even made a note of it that S&Ps had rallied about 30 points, sold off again. Now they're only up 15. And just as we always talk about volatility and right, and what happens when you're driving down the road. Okay, you're driving down the road, and all of a sudden you get those police lights behind you. What happens to you? Right? You tense up, right? You get a little bit nervous, right? Well, it's the exact same thing of what happens in the marketplace. When the market is going down, especially when it's really volatile, like a day like yesterday, and it's kind of continuing on today, tensions rise, volumes rise. Everybody is, now on the ready. Okay. It's no different. It's human nature. Okay. So much of trading is human nature, and the same thing is happening. Okay. S&Ps now are only up 9 points. That's their low point of the day. If we go negative, I'm not saying we will. If we go negative, boy, you're going to hear what's already no, there's no crash, Paul. There's no crash. There's definitely no crash. If we go negative though on the day, okay, you are really going to hear the volume pick up here. Okay, it's a good thing I'm wearing my headset because otherwise I wouldn't even be able to hear myself because it's actually that loud. Not sure if you guys can hear that. Um, Volume, activity, unbelievably busy. Yesterday at CBOE here, traded almost 70 million contracts total. Average days like around 40 to 43 million or so. So unbelievably busy. Now, what have we been harping on for weeks and weeks and weeks? Okay. In fact, we did. I can't remember if it was early in the week or last week when we did our Market Minds episode on hedging a portfolio, when to buy, right? What have we been harping on, everybody? Okay. That we talk about all the time. All the time. Anybody, anybody, anybody. Come on. I want to get into what I want to talk about today. I need some answers though here, guys. Okay, volatility. Thank you, Bobby. What else? What else? What do we always, man, just persistently and consistently harp on all the time besides volatility? Buy when you what? Buy when you can, not when you have to. Respect the charts, respect the levels. Okay? Why do you think we were long IWM downside? Why were we long QQQ downside? Why were we long VIX upside? Okay? Because protection was cheap. Now people are scrambling for protection because now all of a sudden you see the VIX up. Yesterday, the VIX was up 70% in one day. That's right, 70, 70, 70. Okay? Buy when you can, not when you have to. In fact, our overall positions yesterday, even though we have a lot of long positions, so long delta, excuse me, we made money yesterday. You know why? Because we were long so much volatility, so much Vega, and volatility just expanded big time. All right. We ready to dive into today? Okay, let's do it. Let's do it. Here's what I got for you today. Okay, I promised you guys yesterday in the room that we would talk about Contango and backwardation. And it's, perfect time to talk about it today. That is for sure. That is for sure. So, on my little presentation here, I have our tango for Contango, and then I got a little Michael Jackson moonwalk for backwardation. No, I'm not going to try and moonwalk here because I'd probably fall over the railing and break my skull. Okay? Contango and backwardation. Okay? Really important to understand the concepts because they can really be a market signal. All right? So let's dive in here. Contango and backwardation. Contango, okay, is a situation, an environment which is typical, normal, meaning that prices out in the future are higher than they are today. Okay, spot price that you see on this chart here, that's current, what's happening right now. So when we look at VIX, okay, hang on, let me go to our VIX screen for a second here. Okay, we look at VIX right now, and I can just see it right here. It's currently 23.98, but yep, there it is. Okay, this is reflective of the VIX spot price. Where is VIX right now? That doesn't mean that in the future space, the VIX future that's for January, February, March, et cetera, that doesn't mean it's trading there. This is the VIX spot price. Okay? All right, back to our charts here. Contango is that normal sort of curve, upward sloping curve, where you get prices that are higher in the future. Backwardation, which only happens 20-ish% of the time. Okay, backwardation, that's when current prices, spot prices, are higher than futures prices. And we'll go into, in a little bit here, the reasoning why that happens and what the significance of that is. But it's really important to just understand these two terms. Or even if you don't understand the terms, it's really important to look at, and let me pull up a live chart from CBOE here. Here is a live chart. Can everybody see that? Can everybody see this chart? Because this is a live term structure chart of the VIX. And what does this show? Here we are right now, and you can see the VIX just getting cheaper and cheaper and cheaper and cheaper in the future. That is typically not the way things work. And this is actually a great, you guys should all be aware of this site, and it's on the CBOE website. Should all be aware of this, where you can see at an instant what the term structure or what the curve is in VIX futures. If I go back here and let's put in, look at that. That's 2.5 weeks ago, the beginning of December. That's a normal curve. That's a normal curve where we see spot VIX down here and then, slightly increasing, slightly increasing, slightly increasing. That's normal. Okay? But when the you-know-what hits the fan, for whatever reason it is, when that happens, let's go live to right now. We see that shift. Why is that? Why is that? It's the analogy that I use with you guys all the time. Okay? When you're going out and you're shopping for your insurance, for homeowners, car insurance, personal articles, whatever it is, okay? You want to have that insurance when you don't need it. You want to have that insurance just to have it. And if it goes out and you never use it, hopefully, thank goodness, great. You don't want to not have that insurance. And then, God forbid, you get into a situation and have to go run and panic to get that insurance, because then you're getting fleeced if you can even get that insurance. Does that analogy make sense? Same thing with this protection in the marketplace that we've been talking about. When the VIX was down at 12, 13, S&P volatility in single digits, it doesn't last that all the time, guys. We have to respect proven levels. We have to respect data. And anybody that doesn't, and that's exactly what we teach here. Okay? Anybody that doesn't, shame on them. Totally shame on them. Okay, what I've got right here, guys. This is a live chart of the VIX. Where did we get into our position here? Where do you think? How about right here? If I look at that bottom level there in VIX, boy, I want to buy it there. And not only did we get in when the VIX was at that level, but there's also something called VVIX, the volatility of the VIX. Here is the volatility of the VIX. We got in right here. Look where it is right now. Look where it is right now. Okay. Am I being a Monday morning quarterback? Nope. What I'm doing is pointing out that you always buy when you can and not when you have to. Okay, let's get back to our contango and backwardation. Is everybody with me here? Okay, it's calmed down a little bit. Actually, again, here's some of that behavioral or emotional side of trading, and we're with, the best professional floor traders in the world here. Since I've started, S&Ps have rallied about 15 points. The volume's actually gone down a little bit here. Okay. Now, let's talk about, because I just talked about what the spot price is, let's talk about futures versus spot price, okay? Spot price refers to the current price. Whether you're talking about the VIX, whether you're talking about a commodity like gold or oil or corn or wheat, whatever it is, that is the current price where if we were going to make a transaction right now, boom, that's the price. Futures price obviously is, okay, what are we estimating that price is going to be in the future? Whether it's a week from now, a month from now, 3 years from now. Okay? A futures contract, and I'm talking about futures right now because VIX is actually a futures product. Okay, when we trade stocks, stocks are not futures products because regardless of what expiration you trade, it's all tied to the same stock price. Okay, so a futures product is obviously an agreement to buy or sell an asset, commodities, financial instruments, whatever it is, at a future date. Okay, and the futures price typically is different from the spot price for a variety of reasons. Okay, supply and demand obviously drives pricing everywhere. Okay, supply and demand drives pricing everywhere. Uh-oh, are we hung up here? Hang on. Hang on. Can you guys hear me and see me? I'm getting a message here that, oh, geez, Mike. Okay. I guess we're good. Okay. Okay. We're good. So the futures price can differ because of supply and demand. Okay. Interest rates, storage costs, market sentiment, whatever it may be. Okay. Probably the most drastic drastic thing that ever happened to any commodity or any asset class in terms of future prices was what? How about when the very beginning of the pandemic, I know it's time that, many of us don't ever want to think about, when we saw oil prices go negative. We saw oil prices go negative. Man, how many of you went out and bought barrels and barrels of oil just to store underground in your backyard, right? You made a boatload of money if you did. Okay, Contango. Contango. Okay, we're measuring something across time. So now spot versus sometime out in the future. Contango means that futures prices are higher than the current or spot price. Okay, so that futures contract or futures price trades at a premium. Okay, that again is the normal state of markets. Happens about 80% of the time or so. Okay, and that's because, just think about it, prices rise over time, whether we're talking about the market in general, your groceries, your Xbox, whatever it is, prices rise over time. Okay, so hang on, guys, because we're uptick here in S&Ps, but something's really busy here. Okay, can you hear the background here, guys? Can you hear all the noise? It is rocking and rolling. It is busy. It is busy. So when we're in a state of contango, which is normal, okay, that's generally associated with adequate supply and demand, okay, and typically low volatility. No background noise? Okay, that's bummer, but you can see everyone behind me. Okay, low volatility. Now, if we get into backwardation, okay, that's when all of a sudden the spot price gets more expensive than the futures price. So the futures price is trading at a discounted value to the spot price. Why is that? What would make, in the situation we are in right now, let's call it with the VIX, okay? What would make the spot VIX spike up like it did? Okay, what would cause the prices for the here and now to spike up like it did? Here's that chart again. Well, Robert, these headphones don't matter. Everything's coming from the microphone. Everything's coming from the microphone. Here's my microphone. Okay, market uncertainty, disaster, calamity, but when? Something happening right now, right? Something happening right now. So when you see a curve like this, what this is telling you at a quick glance is people are really worried about what is going to happen right now or, in the next several days. And then that concern eases a little bit going out. Okay? So think about it. If you didn't, I'm sure you heard that. I'm sure you guys all heard that. Because I had to pause for a second. 111. It's hang on, 1114. Yeah, that's 1,000. 1,000 contracts on this spread, whatever that was that just traded. Okay, so if you're in that situation and you don't have your insurance, God forbid something happens, and you're panicked and you're calling up brokers, you got to get it right now. Well, all of a sudden, that demand is rising, right? That panic is setting in. You're going to have to pay a higher price. People that didn't have the protection in the market, all of a sudden, shoot. Not what I really wanted to say. Shoot, now I got to go buy it. Okay, supply and demand, driving those prices higher. Okay, so Real backwardation really happens only after an extreme event, an extreme expansion in volatility. Okay? So you got to keep that in mind, guys. And again, it doesn't happen very often, about 20% of the time. And when it does happen, it typically doesn't last very long. The situation of backwardation can last literally a day or a matter of days. Now, in the case of something like COVID, where nobody knew what the heck was going to happen to the world back then, it lasted a little bit longer. Typically, though, it does not last very long. Let's get to Groucho here first, and then we'll get back to our discussion. Okay, here we go, guys. Here is Groucho, the word of the day, curve. Curve, like a curveball or like a volatility curve. All right. Okay, December of next year. December next year, 5,800 put in the S&Ps is being quoted for size right now. We'll see. And now the 5,900 puts are being quoted now also. Going to have to watch, see if those trade, if those go up. If you guys want to just watch something, pull up your markets in S&P options. Okay, these are the D's 5,800 and D's 5,900 puts for 2026. Thank you, Chris. Okay, let's get back here. This is what your curve looks like. Okay, these are actually, just images I created. We just saw it, though, with the real VIX curve that I just showed you. Okay, downward sloping typically means we're in a period of heightened volatility because future prices are less. Upward sloping, more normal. Okay, lower volatility, expecting prices to rise in the future. Okay, this is another way to look at the VIX chain. Okay, now this I took only about an hour ago, and it's really different now because vol has increased back up. But in this situation right here, okay, and this is also on that same CBOE webpage, okay, and I'll actually post in the chat here what that webpage is. Here's the spot. This was about an hour ago or so, and you can see those prices lower in the future. Let's see what that is live now. This is what it was about an hour ago. Let's go live. And here we go. So you can see this is live right now. Here's the spot price. We're still backwardation, but everything has elevated a little bit from where we were earlier. 64 half. Okay. Here is, by the way, let me post this up here. A great resource for everybody. Here is that web page on the CBOE website. Hang on one sec, guys. I want this broker next to me who is quoting these. Oh, he's selling those December 2026 puts I was talking about. 5,800 and the 5,900. He's selling those. Okay. There you go. Now, I want to focus in now, guys. 5 different scenarios. These were live quotes as of about a half an hour ago. Let me try and blow this screen up here a little bit for everybody. Where is my magnifying glass? There we go. Okay. This right here, okay, this is right off of Thinkorswim. This is a market right here in natural gas. Okay. Here's the current contract. And then futures contracts. Okay. Natural gas pricing. Contango backwardation. Question for you all. Quiz for everybody. Hey, that D's 26 put. All right, here we go. Yeah, he's selling. Selling those puts. Okay, is this backwardation or contango, guys? This is the natural gas market. Okay. Yes, it is backwardation. It's backwardation because the current price right now is higher than the futures price. Okay. Here, whoops. Let's see if I can get zoomed in here. Here is Bitcoin, guys. Okay. Here's Bitcoin. Current price, futures price. Backwardation or contango.
And 56 half put tied to 65.
The trading den earnings. Whiskey options, I'm not sure what you are talking about there. Yes, it's contango. Okay, normal state.
Hey, I can sell my 20 watt at 367 half.
Okay, now let's just look at one more here, guys. Let's look at one more down here. There's 5 of them on here. This is crude. This is oil. Okay, backwardation or contango. Backwardation or contango. All right, S&P's just rallied 20 points. Let's go. Dow's now up 215, S&Ps are up 25, Nasdaq up 80. Gold actually just moved positive for the day. Oh, my window, hang on. I'm going to do a different one then because I don't know how to change the window on my screen. Hang on. Ah, shoot. Hang on. Yeah, I don't want to mess with that. So instead of that, this is a real small one here. Okay. This is gold. This is gold, and I know it's probably really small for you guys. It's really small for me to look at it here. Let's see if I can blow that up just a little bit.
June 56, 64 half wrist tied to
Okay,
6.
that's about as flat of a curve as you are going to see. Okay, it's almost flat across the next 4, 5 futures. Okay, so if we look historically at what gold is, we'd have to go look and see what is normal. But that is a really, really flat curve. Okay. Oh, I guess I could have maybe scrolled, but anyway, here we are. Okay, we had our last call out there, guys. My guess is, now, listen, anything can happen in these markets right now. My guess is, especially going into the holiday next week, we're going to start to see that volatility curve, the VIX curve, normalize and probably head back towards contango or at least flatten out. Okay? It'll be interesting to watch that.
44 half fit on 30.
Okay. Michael Clark, are we ready for our wheel? Does anybody have any questions on this before we go to the wheel for the day? Wow, it just got so quiet here. Holy and now it just picked up. Boy, oh boy. Okay, we got the wheel here, guys. Let's do a 2 for today also. Okay, Let's do a twofer on the wheel today.
Like a 60 on a 50.
And by the way, anybody that's won swag up to yesterday, it was all sent out yesterday. There's a clean slate on my end. Okay. Um, you can't get in today, Terrace, but you have to put in the chat the word of the day. So when you log in tomorrow, you'll see what the word of the day is, and that's how you get onto the wheel. Okay. Here we go, guys. Number one. Number one. Winner is ZW. Haven't seen ZW before. Do we have a ZW in the house? ZW, are you here? Let us know if you are here. Oh, that was quick. Wonderful. Wonderful, wonderful. So what you need to do is shoot me an email right there. Okay, prosperswag at prospertrading.com. Shoot me an email with your mailing address and the size swag. Let's do one more, guys. Let's do one more. Here we go. Here we go, here we go, here we go. And the winner is AZ Bob. My guess is we have a Bob that lives in Arizona. Bob, are you here? AZ Bob? AZ Bob, are you here? Looking for an AZ Bob. AZ Bob in the left side, right side, up, down, anywhere. Are you here? Yes, you are. Bam. Bam, bam, bam. Wonderful. RJ, that's you? And you're the one that actually wanted to talk about backwardation and contango, right? Boom. Boom. Love that. Okay. ZW, Arizona Bob, make sure you email me today. Address and size. Guys, get ready for tomorrow. Tomorrow is going to be a special Market Minds. Okay. Tomorrow you will have me. You will have Mike Shore. And you will have Charlie Moon. We are all going to be on here tomorrow collectively. We will be answering all of your questions. We will be looking at stocks you want to look at. Okay? Maybe even take a look at where we want to be positioned going into 2025. But you will get the trifecta tomorrow. So definitely look forward to that. Okay? Everybody, have a great rest of yeah, it's a triple witching day. Bear, that's it's well, let's see, we could probably add in one more, make it a quad witching day too, but yes, that's a good one. All right, everybody, thank you so much for today. I'm going to head back upstairs into our office, so I'll see you back in the rooms here shortly. Really appreciate all of you. Be well, everybody.